Video on hard stops versus soft stops, why they exist, why you guys should do this in your own trading, how much money it will save you in the long run, and I think that using this approach will make everybody a better trader. So, we're going to pretend that we long this level, okay? So, we break down and we take some longs right here, okay? I'm going to point at the candle myself. It would be right there. Okay? So, many people will do something like this, where they long here, and they just place a stop loss, like here. In crypto, this will never work, and I'll tell you why. These things are beyond scammy. I mean, look. Let's look at Bitcoin. Let's look at any of these things. These wicks are massive, and they will stop you out every single time. If you guys look, they don't hover. They stop you out, and they just run it right back up immediately. They don't give you a chance to actually re-enter your position. When they give you a chance to re-enter your position, it means you're just wrong, right? And if you look at the charts, you guys will see what I mean. Look, they give you a chance to re-enter all day long, and this thing just bleeds out, right? Same with something like this. Again, you get your chance, nuke through. So, how do you incorporate this in your own trading? It's actually pretty simple. So, let's say we long something like this, okay? We're going to draw the boxes again. We're going to do all of this stuff because I know this kind of stuff really does help people. So, we're going to take our box and we're going to just draw this all the way across, right? This is our support level. We're going to just pretend this is the level we're using. Okay, guys? Right here. I'm just trying to take all these wicks. It's not the cleanest thing in the world, but it's fine. Okay, it's fine. For this purpose, it's totally fine. So, let's look at the chart. We are longing this demand. And if you guys listen to what I said in the trade guide, the stop loss is a close below this level. So the idea is simple. If the price is able to actually break down below this, we just cut the trade. We are wrong. We admit we are wrong. And if you guys look, when you are wrong, you are wrong. They will just nuke it through. There's no buyback, there's no exits, it's just nuke. But many times they will have these long wicks like this. And this is pretty much just meant to punish you for over leveraging your account and setting a really tight stop loss. But look at where the candle closes, guys. It actually closes back inside. So what you want to do is you want to set a very, very loose hard stop. Maybe here, well below where your actual stop loss is. And I'll tell you why. What you want to do is actually see if the price is able to break down. If we look at this on a closer level, it's just a wick, right? They trade the price down into this level, immediately buy back into this box, and then we trade back inside. If your stop loss is sitting right here, this sucks. You never get this entry again. You have to buy back higher. So what you want to do is you want to mentally understand that, okay, if price breaks below this level, my trade is invalidated. But something like this is not a break. This is only a wick. I will always ignore wicks like this because they always happen in crypto. It's the exact same with the bot. That's why the bot has a stop buy, because we understand that this kind of stuff happens all the time. Again, imagine you're longing up here, you're breakout longing, and then you get you get wicked all the way down to here. If your stop loss, right, was just sitting right below here, it's a valid stop loss in the sense that if we broke down below that level, your trade is wrong. But in reality, we wicked off it and it was just full strength, right? That is why tight stops are extremely dangerous in crypto. It's fine to have a hard stop to protect yourself. In fact, I always say you should. But if you're running super, super tight stops, guys, you will get obliterated. Again, let's take a trade like this. Pretend you are longing, this box right here. We can do the exact same thing. We'll just draw this out, right? Here are our previous highs, right? And there's our potential flip, right? Take a trade like this. We can even draw it a bit lower, just for funsies. We'll use this white line, right? We wick all the way into it, we send, and then look at this. Imagine in real time, guys, what this looks like. In real time, what this looks like basically is just a flat out nuke. It looks like we are going to zero, right? If you can't see the rest of this picture, right? This looks like it's going to nuke. But if we look into the chart on a lower level again, what happens? We take out the low, and again, immediately reclaim, immediate buyback, and the price is strong. This is why you cannot have hard stops, because if you do, they will find a way to rinse you basically every single time. So my suggestion is keep a hard stop that risks maybe a lot less of your account, but keep a soft stop, because if you don't have a soft stop, you're going to get smoked. Again, let's take this example. We are longing the flip of this key level here, okay? Here's our order block, okay? We can draw it across and kind of prove that it's valid, but I don't really see a need. I mean, you guys can see it here, right? There's your block. Clearly resistance, support, resistance, whatever. This is a key inflection point for the price. There's virtually no doubt. I mean, you guys can see pretty much exactly how this is responding. You know, we draw this all the way over. Huge consolidation at this level. So, let's say we long this flip, this retest, whatever. Again, if you had a hard stop, your hard stop is going to be well above here, and you are going to get wicked out at the very bottom of this trade, right? Look at this. Disgusting. And why is it wicking there? Because they want to take out that wick. They're just taking out stop losses that are sitting below these wicks, because people will logically place their stops below the previous lows. That makes sense. This is a very, very easy way for market makers to just simply take your money. And then look, you have to immediately buy the whole thing back higher. So what would I say? If you're there in real time, set a hard stop maybe here. Something way below where your trade is actually wrong. And in real time, you can monitor something like this, guys. You'll know if this is a scam. It's on a 5-minute chart. You should not be risking this much that you have to be terrified that this will hit your hard stop. It should not be that kind of thing. You should be able to just kind of loosely monitor this and say, okay, if the price actually falls below this level and stays there, I will cut the trade because I am wrong. That is how this stuff should be working, right? Again, let's look at Solana. We'll look at a 15-minute chart. We'll do this one more time. Look at yesterday's trade. Again, I'm guilty of it too. I had a hard stop loss right around here. Again, let's see. Look, here's our key level. Here's our wick. The price is trading just above this wick. And this is why I had a bad feeling going into last night, because if we look at the chart, guys, there's just no strength. It's just kind of bleeding to zero. I mean, you have a squeeze that takes out all this, and then it just bleeds out over time. So what happens though? Look, they take out all the stop losses. Where are the stop losses sitting, guys? Well, it's pretty obvious. This is the level that pushed the price up, so all the stop losses are sitting just below here. And look, they wick it all the way down, buy it back immediately, and then look, now they have flipped this level back to support. Again, the price is accepting above here. If you have a hard stop loss, you're going to get stopped at the bottom, and you just have no chance to re-enter. If you don't, you have a much better chance of winning the trade, because just because the price went down here for half a second does not mean your trade is actually wrong. Your stop losses should not be based on how much money you lose, but rather when your trade is truly wrong. And the trade is only wrong if this is what happened, where you break down, you tested this level, you went lower, and then you actually broke down. So I hope this helps kind of explain my trading philosophy, guys. This is kind of what I use to trade most of the time. It's given me a lot of success. If you have any questions, feel free to ask, and I will catch you in the next video.